You're about to watch me trading live. In this session, I'm going to be probably showing you a trade setup that most traders are going to be losing up upon. I'm going to show you 3 ways of how you're going to be identifying these kinds of days and profiting out of these days instead of losing. So here's how it goes. If you are looking at all of this price action, the first thing that comes to your mind, okay, we have been trading on to the downside. I should probably take a short. Because right now, we are in this FEG after all. We're going to be marking it out. And perhaps the price action should be trading lower because it's going to be continuation. Well, you're wrong. You would have lost on that setup and you would have basically blown another platform account just because you have done something like this. It has happened to you so many times at this point, doesn't it? Okay, you are just trying to basically continue the trend. But I have to inform you that this is going to be wrong. Simply because that is going to be the #1 mistake. Just because we are seeing price action go onto the downside and we're creating lower lows, it doesn't mean that we're having the price action that is going to continue in that. Okay, because on the entire spectrum of things, there's going to be the bigger picture. The first mistake is that traders don't look at the bigger scale. Now, how do we even look at the bigger scale to begin with? We don't just want to go into the daily time frame and say that, okay, we have been created a low in here, we have taken out that entire point, there was a break of structure, for example. We want to look at it from a perspective, okay, we're having highs that are closely to each other in here, so probably this is going to be the long-term bias which we want to trade into. So this already allows us to think a little bit more separately than what is going on internally right now, because internally we're trading lower, but externally on the daily time frame we are trading higher. Okay, now we're going to be having more setups today and also more examples, as these things just repeat over and over again. Okay, everything here is basically fractal. If you're going to be comparing it with somebody that is going to be taking a trade like this, who's going to be trading onto the upside, just like we are going to be doing it today, and he's going to be taking a 142. Do you believe that this trader is more profitable than the guy who identifies that the downtrend is over fast, rather than the trader who just wants to trade the continuation? Because I do get it. I do get the idea, okay? And the trade is truly a friend. I don't know which kind of guru came up with this idea and tried to basically go against the mass and say that, no, the trend is not your friend. The trend is absolutely your friend. Why should you trade against the trend? So it is a good bias to basically think about, okay, I just want to trade lower. Well, because we are already going on to the downside. But there is going to be an end to it. And most traders will never even be able to identify when is that end going to be. And that just keeps them unprofitable. So how do I identify the end? When you're looking at this price action, okay, see the price action as like a car. When we're trading lower and making lower lows and also lower highs, okay? At some point or the other, you have to look at it as like a car. If the car keeps on going, let it be some kind of country where you don't even have a speed limit. It just keeps on going, this entire car, okay? Well, eventually it is going to run out of fuel. Don't you think so? Because I haven't seen a car in my life that is just going to keep on going and going. So eventually what has to happen, even though the car is just keeping on driving into one direction, let's just put it in here. This is going to be the entire car. It is driving in that direction. Eventually it can't go straight forward, but it has to basically go to a small gas station here. It has to fuel up. Okay, now we have fueled up and then we can continue basically into that same direction. This is basically what happens with the price action right now. You see, we're trading lower. We're just taking up fuel basically. Okay, even though right now this looks like a downtrend, we're just taking up fuel. And then from here on, we could be taking basically our real move onto the upside. Okay, because everything right now, this is just taking up fuel. This is just noise right now. Ignore this if you want it like that. So if we're going to be breaking it down even simpler, what we want to be doing is go into the 50-minute time frame and ask ourselves, are we more likely to go for that high or are we more likely to go for that low? We're probably more likely to go for that high than for that low based off the reasons that I've just explained to you. Now, we can push this a little bit higher than just that alone. If we're going to go into the daily time frame, then we can see that this high that I've marked out is going to be the previous day high. We don't want to trade into it. There's going to be a mistake number 2 or 3, was it at this point? We don't want to trade all the way to the previous day high. Now, why is that? You're going to look at every single candle on the price action. Okay, what can you spot? We have basically taken out, let's just put this one as an example. All right, let's take this one actually. So we have basically traded into its previous candle low right in here, as you can see. What has the next candle done? Okay, it has not traded into the low, but also not into the high. What about the next one? Into the high and the low. My point is basically, if you're going to look at these candlestick examples, all of those have something in common. Not that they're just going to go for the candle high of the previous candle, but the fact that we're only going for one side of the market at a time. Does that make sense to you? So rarely we're going to be having a price action candle like this one, where we're going for the high, but also for the low. Most of the times it is either going to be the low or the high. Rarely it's going to be both or none. So from this point on, we're just going to go into the 50-minute time frame. Let's go into the daily real quick. Here you want to see, okay, we're probably not going to going for that high. Well, because we have already been going for the low. From this point on, the move is pretty obvious. We don't want to trade all the way higher. But what we want to do is at the very minimum trade into that entire 50-minute high. Because we've just identified what is more likely to happen. Probably the high. Now for that though, if we're going to be putting it like this, it is possible, but I don't really like the risk reward, especially on futures. So instead, what we're going to be doing is we will be looking out for entry refinement. This is going to happen on the 1 minute time frame. Okay, so we're sitting in this 50-minute FEG right now, but we want to be taking a trade lower basically first. So when I have liquidity being taken out, and then from that point on, we basically just want to take a trade on to the upside. That's all that we want to do. Now let me quickly connect to my broker. Okay, there we go. Ideally, what I want to see is a move lower. See, that's the reason why most traders are going to be failing to begin with. They're looking at the price action and they're saying, okay, well, you know, if we're going to be doing this, then I'm going to be reacting based off whatever and then trade higher. If we're going to be doing this, then I want to be reacting based off whatever and then trade lower. This creates a lot of option. And when we have a lot of options, that is the point where we are going to be failing. Because in trading, it basically works like this. The more options you have, the more errors you're going to be introducing. But if you're going to be having a very few options to look out for, well, then there's going to be fewer errors. So this is what I like to do on a day-to-day basis. I limit myself by the options that I am able to take, basically. And for that, I go into the 1 minute and I want to see something very specific. Because once again, I limit my options. I want to see a low being taken out. This can be this low, this one, this one, this one, any of these lows. Ideally, I want all of them to be taken out, but a criteria is just going to be one of these lows. From this point on, I want strong movement onto the upside. Okay, so we're not looking for something like this, where most people would just believe, okay, this is a strong movement onto the upside, let me take a long. Might have worked out, but probably you would have been stopped out because of this entire candle. It has traded lower. That's exactly why this candle is there to begin with. Okay, to stop traders out that are just not reading the price action well. So how do we read the price action well? When we're going to be having price action like this, that's already a different scenario. You see, this is valid. Now you might be saying, well, how can this candle be valid, but this candle is not valid? Well, the reason is simple. The difference between the candle previously on the right and the candle in here is basically that if you're going to be comparing it with pretty much every single other bullish candle that has previously been reoccurring, okay, now keep in mind, this is not the time that we're going to be trading anyways, but the principle stays the same. Then you can see, this is the biggest candle that we had in a very long time. All of the bullish candles that are in this entire area that I'm marking out are not as big as this one. So this is going to be a comparison, but if we're going to be taking that candle, well then yes, we have a few candles which are just as big, such as this one or this one. Did you spot it yourself? Or, you know, in theory, you could even take those two candles if you're going to go into the 3 minute time frame, but we're not going to be including that for now. You have to basically compare it with what has happened recently, or else it's going to be very hard to identify for you, okay, are we going on to the upside or to the downside? Or is now the right movement that the movement candle is there, or is it going to be a different one when we have more movement? Okay, this is how you're going to be differentiating between low probability movement candles and high probability movement candles. So see, right now, what most traders are going to be doing, and this is going to honestly kill 99% of every single trader that is watching this and is not going to accept that they have to learn what this actually means. Okay, so if you are not committed enough into this and actually understanding what that means, then, you know, this is probably the wrong channel. But for the ones that are basically sticking around and want to learn this, here it is. So previously we were on the 50-minute time frame. And what did we have? So we are trading lower internally, but previously what have we seen? We have seen, okay, we had a rally higher. Now we have 1, 2, 3, 4, 5 candles that are going on to the upside. Notice I'm not counting this one. Well, because firstly, out of 2 reasons, okay, actually. Firstly, it has not closed yet. As long as something hasn't closed yet, I don't count it. I only count closed candles, because this candle, even in the last second, can give you anything. It can even become a bullish candle again. So I never count a candle that has not printed. That's rule number 1. Well, the second one is going to be probably because it is also just going to stay bearish, and for the sake of it, I am only going to count everything that I can already comfortably say. So we have 5 candles basically onto the upside. Why does this matter? Well, because it means the more candles we have of one direction, the more likely it becomes that the next candle, so this one, is going to be the opposite color. Now, so let me repeat it again. See it in a way of flipping a coin, okay? There's like nowhere recently a price action where it was looking as clean. See it as like flipping a coin. So if you're going to be flipping a coin, okay, and you're going to get heads 8 times in a row, what are the chances that you're going to be having tails, or that you're going to be having head another time? So the 9th time in a row, not just, you know, okay, head and then tail, then head again. No, in a row. What is going to be the odds that you're going to be having a head again? Well, quite unlikely, because you already had 8 times in a row head. So the next one is probably going to be tail. The same applies to the price action basically. The more you're going to be having of one color, so basically you had head, 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 and the more head you're going to have, the more likely it becomes that the next one is going to be tail. So from this point on, we expect tail. Now, possible chance where we are going to be trading towards is going to be 2 options basically. First of all, it's going to be that 50-minute FEG, and it's also going to be this one. Preferably, I like to trade even all the way lower into that one, and then from here on to the upside. Now, why is that? Because we need a deeper pullback. Remember what I have basically previously explained to you when we had this entire thing on the 1 hour time frame? We are trading lower, but all of this is what? Fuel. We're just taking out fuel right now. We don't really want to trade lower. This is just faking you out. We don't want to trade lower right now. So it is the same in here on the 50-minute time frame. All of this right now, this is just fuel. We don't actually want to trade onto the downside when we're going to get into this low. And only from that point on, I would expect higher prices. Okay. Potentially, it could also just fall into that FEG and then higher. This is not going to be a hard criteria though. It doesn't necessarily have to happen, because after all, I have very clear defined criteria rules, which they stated as so. We want to basically have a higher time frame bias, which for today is going to be the upside. Then we want to take out liquidity internally, which we have basically just done. So confirmation number 1 has already been fulfilled. And then the next one is going to be strong movement onto the upside. Okay. And ideally, we also don't want to be rejecting or even showing signs of rejection off of this entire BPR. Now, what is BPR going to be? You see, as an example, this is going to be an FEG, right? So you see, this is an FEG. So candle number 1, candle number 2, candle number 3. We are creating a gap between candle number 3 and candle number 1. You see that gap? And a BPR is basically 2 FEGs. So 2 fair value gaps overlapping with each other. So you see, we have basically FEG number 1 and FEG number 2. They're overlapping with each other. And so that creates even more basically inefficiency in the market. And that's pretty much it. Okay. And here one more time. Okay. We're going to be repeating it ourselves because it's so important. Traders are going to be losing in this price action. You have lost at this price action so many times because you just want to take a long right now. You just want to take a long. Why? Because you saw the price action going higher for just a bit. But what have I told you previously? Compare it to a couple of candles that have happened in the past. Is this candle really that much bigger than this one? Not really. Is this candle really that much bigger than these ones? Not really. And I'm specifically only taking bullish ones. A scenario which could change that entire idea is if we have 2 or 3 candles onto the upside. Okay? So if 1, 2, 3 candles onto the upside. Because then if we're going to go into the 3-minute time frame, this is going to be a rather big candle. Yes, then it's okay. But before that has happened, I am not looking out for a trade. Okay, now I'm starting to see some movement, as you can see. Yes, we want to trade this onto the upside. The question is, are we able to continue all of that movement? And for that, the entire candle has to close basically first, and then we can trade it onto the upside. Most traders miss this. So they're not looking at the entire time of when the candle is going to be closing. So in that case, we're at 8 seconds right now, and they're just going to be taking a trade already. No, I always want the candle to close. I never trade based off a candle that hasn't closed yet. Okay, from this point on, once we're trading a little bit lower, I'm going to be taking a trade. Okay, we traded lower, and I'm going to be taking. Okay, now we're going to be putting our entire stop loss, NTP, and this is pretty much already it. Okay, so all we did is what? We have seen internally, you know, way back then, a couple of minutes ago, on the 50-minute time frame, that our bias is bullish. And then from that point on, I've previously also told it to you, we need some kind of low being taken out, and then I want strong movement onto the upside. As long as we have not met that, I didn't take a trade. Arguably, you could be saying we're going to be taking a trade off of this one, but I've previously explained to you why. Why would you do that, okay? Most traders are going to be missing out on so much profit not doing it this way. Well, simple as that. If you're going to compare it to the previous candle that was just as strong, is that candle really that much stronger than this one? Not really, okay? But now let's compare it to this candle. That's the kind of candle that we want to see. It's bigger than this one. It's bigger than this one. It's bigger than this bullish candle. It's also bigger than any other candle that you're seeing on a price action right now. That's how you can tell now is the right move, or at the time when you want to be participating. That's the only way that you can tell it, basically. You're going to be comparing it to what has previously happened. This is the only way how you're going to be getting out of the cycle of just keeping on losing and losing and losing and losing, okay? By having clear entry criteria when you want to be taking a trade. All we really did is the same that I've done in all of these other videos, okay? If you're new to the channel, this is only my second channel. Go check out my main videos, basically. There you're going to be seeing more stuff. I'm doing the same stuff over and over again, and yet guys still don't understand this. Even though I'm explaining to them, brother, watch out for the price action. Try to take notes what I'm teaching about. This was the reason most traders are just going to be getting a loss right there. They're going to be having something like this. Oh, well, you know, we have traded onto the upside. Let me just take a long onto the upside. Guess what? At this moment in time, this would have worked. Okay, so far you would have been in a take profit or in a winning position. But what about the other million different times when this didn't work out? So the question becomes pretty clear. Are we really supposed to be taking trades based off one event? Or are we able or supposed to be taking trades based off 1,000 trades being journaled? At the very beginning, when I started out trading, I've been stopped out in these kinds of moves very often. And I thought to myself, what can I do differently in order to not get stopped out as many times? So I was just basically demo trading and also live trading, and I lost a lot of money, basically. But what I didn't understand at that time is that most of the times I failed because of a psychological error. Because I basically didn't have any guidance to trade the price action. It was basically just me and the charts. Which that in itself is not the problem, okay? The problem relies in me not being able to hold myself accountable. How are you going to be able to hold yourself accountable when you're on your own, basically? So there's two ways of doing this. Either we're going to be having guidance, and by guidance, by any means, okay? No pressure. I don't want to sell you something with this. You can also just do it with a friend, okay? You have a friend that is also trading, and you're going to be holding each other accountable. I don't mean that, okay, you're going to be taking the same trade setups. That is not trading together to me, okay? Unless you fundamentally have the same strategy. But usually that is not how trading together works. Trading together works is by holding each other accountable, okay? Telling your mate, okay, you know, today I did this kind of trade. It was not a good idea. And then he's going to hold you accountable. And you're going to be doing the same for him. This is how real trading together should be working. Unfortunately, we live in a world where this shit gets harder and harder to do. When I started out to be profitable, there was nobody, basically. Okay, nobody that had that same mindset as me. And there's no worries about it. But it's quite frustrating to see, because a lot of guys could be leveling up way faster if they had just somebody to tell them their trades. Because also, based off studies, if you're going to be explaining something to a person, then they are way more likely to understand it themselves. So what I mean by that, when you are going to be explaining something to me, even though you don't understand it fully, then you're going to be understanding it way better. Why? Because you have explained it to me. Okay, we all have seen it, back in the day when we were in school whatsoever. We didn't even know ourselves what the fuck we were talking about a specific topic. But the moment when we have explained it to somebody, we have understood it ourselves, even though we didn't know what the fuck we were talking about in that moment. And it's the same when you're going to be explaining that shit to one of your friends, okay? Which you do actually know what you're talking about. And you're going to be basically learning faster this way. Also, the counts of traders that I've coached so far, I'm also telling them, explain the strategy to me. Some of the guys are going to be saying, well, why should I explain the strategy to you? You're the mentor. This is not the point of it. I can explain the strategy to you, okay? I can explain it to you in my sleep. If I just woke up, I am going to be, this is the strategy, okay? But the question is, are you going to be able to do that for me? Okay, because if you're able to explain it, then you're also probably going to be able to understand it. And that's the whole point of this. You don't just want to be mindlessly taking trades, but you want to understand them. You want to understand the system that you're trading behind it, okay? And also another thing, like very recently live, this entire candle was at some point right there. You have seen it yourself. I hope we're going to be having even one more example of that where the candle is getting even lower. Yes, the price action is basically doing exactly what I have asked it for. Now why? Because I want to show to you that you have to stick to the trade, even though in the very moment it looks somewhat scary. It looks scary, I know. The price action is trading lower, but my break-even condition has not been met. And as long as my break-even condition hasn't been met, I am not going to be putting my stop loss at break-even. Because if you're going to be doing that, and you basically going to be doing that prematurely, then you're going to be missing out on a lot of money. Most traders are going to be missing out on money regardless, because they're losing trades more than they're winning. Obviously, that is not going to be profitable. But in this entire case specifically, my condition has not been met, so I'm also not going to be putting my stop loss at break even. And it's going to be another phase, okay? Not in terms of price action. I'm not even talking about that. A phase within yourself when you're watching these kinds of videos. Or also when you're trading yourself. You be thinking, oh man, I'm the best trader in the world. Now it's finally going on to the upside. This will be the kind of mind that you have right now. But when we were in this price action, we went, no, we're trading lower. And this is exactly the problem, okay? Because you're reacting based off what is happening right now. Put it this way. When you saw me basically taking a trade onto the upside and we were going higher, I was talking to you, just like I'm talking to you right now. When we were going lower, how was I talking to you? Exactly how I'm talking to you right now. When we were going higher, once again, and making higher highs, and we are currently, combined with all accounts, almost 1K in profit, how am I talking to you? Exactly the same. And this is basically the point. You don't want to just ignore your emotions. Because I've seen this a lot of traders doing, they're just going to say, I'm a robot and I hate everything in existence and I'm going to be basically ignoring my emotions. This is not the right approach though. Humans are not robots. And when you're trying to be something that you're not, then you're going to be destroying yourself. So after a while, I just started to accept, well, I'm not a robot. I'm just going to accept the emotions and understand, okay, I don't like being in a losing position. Who does? Who does like being in a losing position? Nobody. And who doesn't like being in a winning position? Nobody. But the question is, are you going to be acting upon those kinds of situations badly or basically great? The answer should, of course, always be great. But things are easier said than done. But the way you're going to be, once again, building up that confidence is by trying it out yourself. I don't know who's watching this video, but leave a comment down below if you're actually going to be trying this out yourself in a backtesting session. Come back to the video and comment down, done. Just comment down the word done. I'm going to be marking out for you real quick. Okay, just comment done. That's all I want you to do, basically. So we are having this entire FEG on the 1 minute time frame. And also, back in the day, when things weren't as easy in terms of trading and financially and whatsoever, some people have asked me one time, how did you know that you are on the right path? And well, my question or my answer to that is going to be, I didn't know that I was on the right path. Like, that's the craziest thing about this. I didn't know that this is going to work out. I didn't know that this is going to be the right thing that I'm going to be pursuing in life. But what I did know is basically, what is the alternative? Because the alternative is worse than whatever happens to me within trading. You know, whether it's going to be losing 10K on a single day, whether all of the prop firms are going to be blown. You know, all of these different things are going to be less painful to me than going back to living the same life over and over again. Having the same 8 hours repeat every single day. That is a nightmare, man. That is a nightmare. The same 8 hours every single day. Has anybody maybe seen the series Severance? Perhaps. This is basically how the life feels when you're working a regular job. Okay? It's going to be every single day the same stuff. And so this is basically worse to me than whatever happens to me in trading, because at least I'm trying. This is what I thought at this moment in time. And I just recommend you doing the same, whatever it takes, wherever you are on your journey. You have to really keep in mind that the shit is going to pay off. It has to pay off, okay? If you're going to be persistent, if you're always going to stick to one thing, that at some point or the other, it has to pay off. And think about this long term, okay? Don't think about it, 1 year, 2 years. Think about 10 years, okay? If it happens earlier than that, then that's cool. That's most ideal. But already plan out 10 years in advance, okay? Because if you're going to be planning out for the short term, like 1 year, 2 years, and you're not going to make it until that time, well, then you're going to be disappointed. Plan out 10 years. Don't let yourself basically take those full 10 years until you're going to be achieving the goal, but plan out 10 years. But within those 10 years, give it your best, not just like 1 year, I'm not a trader, and then next year, I'm kind of a trader, and then the third year, yes, I'm going all in. The fourth year, we're quitting again. No, think about it in a very long-term perspective. And to be honest, guys, I see a weakness of the price action. We could be closing the trade right now. Let me see a little bit. We're going to be waiting out this entire 1 minute candle. See clear conditions. I'm waiting this out. No matter what happens to the candle, I'm going to be waiting it out. Okay, unless it's going to, just randomly dump. Yes, then I'm also going to be getting out earlier. But clear conditions, I want to be waiting out how this candle develops. I'm going to give it one more candle, basically. So again, this candle needs to finish. As long as this candle has not finished, which is going to be 45 seconds at this moment in time, I'm not going to be doing anything of the price action. This is how you're going to be having clear conditions. So think about yourself as your task at the very next moment. Don't think about, because if you're going to say, okay, this is going to be the session where I will be the most focused I have ever been. That is a good thing to say, but you know what's even better? If you're more specific. In the next 60 minutes, I am going to be the best trader that I've ever been. Or even more specific, you see, we're taking it step by step. In this entire minute, I am not going to be closing the trade. Okay? You want to be very specific and also intentional with what you're going to be telling yourself. Words hold way more power than you could ever imagine. Especially when you're going to be telling it to yourself. Okay? Especially when you are the guy that is telling that to himself. Let me check out the 3 minute real quick. Okay, we're just going to get off the trade. We've already run lower. I don't like the start price action. From this point on, I could basically expect low prices. We've gotten out, this was just a quick one. You would rather just ideally hold this longer and longer. I might even re-enter, but I'm just out of the market. I've taken my 1-for-1. I've traded with 1 micro. I've made money on this entire thing. Was copied on all different platform accounts. I'm good for the day. Okay, let's quickly journal the entire trade. That's really how easy it is, man. Life's really good. We have just taken a 1-for-1, but I'm happy with that. And we're not going to be putting the slider all the way to the right. Just because you're not putting it all the way to the right doesn't mean that it's worse, or, to the left is worse, to the right is good. We're just going to put it at calm, because that's exactly how I was. You want to be honest with yourself as well. So I'm quickly going to be taking a screenshot of all of this. We're going to be adding all of that. This was just a 1 micro trade, and we're going to be journaling it. Okay, I've updated the trade. Yep, that's pretty much it. So this was a good day. Thank you guys for watching. If you want to learn basically this entire strategy, but fully, and not just, having a live trading session, but fully broken down step by step, having textbook examples, but then also niche examples, then the video on that is in the description down below, and also it is on the screen right now. So just click on it, and remember guys, trade based on data and not guesses.